Now, despite the stock market moving higher, as I've said before, the stock market is not the economy. And you have a lot of people out there who are just barely making it. And that's some of the things I'm seeing. Very few people are getting ahead. Right now, it's basically the population is treading water. Now, their feet aren't touching the bottom and they're not quite running out of energy. But at some point, you know what's going to happen. And the consumer is going to end up drowning because we're not seeing prices go down. Prices of services, prices of goods. We've seen them stabilize, but not go down. Now, the minute that they turn up, the water is going to rise and the consumer is going to end up drowning. Now, can this be hidden from Wall Street this year due to it being an election year? Probably so. But after the election, when the real numbers begin to leak out, it's going to already be too late because you're going to have a majority of Americans whose credit has been trashed. And it's going to take years for them to build that credit up to get back in the cycle. Now, at the end of this year, when we start seeing the consumer fall off, at the same time, you're going to see Wall Street start handing out these extravagant bonuses. And we've seen this type of behavior before where the executives lay off 10 or 15% of the company, and at the same time, they're receiving large bonuses. Many of these fund managers, many of these analysts, they're going to get $1 million bonuses while commodity prices rise and inflation comes back to the little guy on the street. Now, the stock market continues at record highs, and the S&P 500 broke 5,000 for the first time ever. And if you think it's going to stop, it's not. These stocks are going to defy logic. And if you're betting, thinking that these stocks are going to fall, you're going to be wiped out. Now, as the stock market has moved higher in the past few days, oil has been quietly inching up, and Brent crude is now nearing $83 a barrel. And that's something we're going to have to watch because right now, the geopolitical atmosphere is so fragile. One bomb or one terrorist attack goes off in some country somewhere, and oil is one snap away from $100 a barrel. And that would mean putting gasoline prices back at those records we saw a few years ago. And if that oil goes up, folks, it's going to be game over. It's going to be game over for the consumer because already you have so much of the population on a razor's edge of being kicked out, of losing their car, of having their lights turned out, of having their credit score trashed, that if oil and gasoline go back up, it's going to be curtains. And also, if the price of these commodities go up, it's game over for the Fed. They're going to have to turn around, reverse course, and start raising rates again. So those are the two commodities to carefully watch over the next few months. Now, I did a video on the railroads having a slightly higher freight volume shipping during the last quarter of 2023. And that seems to be short-lived as January's railroad freight volume was down 7% year over year. Now, so far in the first week of February, rail volume seems to be rebounding. It's up more than 11% year over year. And that's something to keep an eye on, especially if fuel prices rise. Railroad volume usually picks up when the price of fuel and gasoline move higher. So now in 2023, beef prices moved up the entire year, and it looks like that's not going to stop. Experts are predicting that 2024 will see even higher beef prices, and a lot of that is due to drought conditions. Now, if you like this type of content, please like and subscribe. Thanks for watching.